In the last 3 years, we have grown Palantir from a 743 revenue business with hundreds of millions of dollars in actual loss to, in the last 12 months, a $1.744 billion business with 300 million in free cash flow, which represents a 41% CAGR. 41% CAGR on a business that is now in its 18th year is very unusual. There are many reasons for the strong growth, but you live by the same sword that you pay the price for. And we deal with very, very large contracts. And the USG has some of our largest contracts, and they have been pushed out. But because of uncertainty toward the end of the year, we're revisioning guidance down to $1.9 billion. I personally remain very optimistic that the next 3 years will look a lot like the last 3 years, again, where we took a money-losing business and made a business that throws off free cash flow, where we ended up, as of today, with $2.4 billion in the bank and no debt, and that the large and chunky nature of our contracts will continue to be, in large part, an advantage because these contracts do not disappear. Sometimes they are put off. Sometimes they take too long for us to get them. But at the billion-dollar range of the contracts that we are working on, they have the bug of sometimes taking too long and the feature of, in a highly difficult, tumultuous, and politically uncertain world, that you actually get paid and you actually make free cash flow. Moreover, we have 5 of the most interesting, important, and crazy baller, impactful products in the world: PG, Foundry, Nexus Peering, MetaConstellation, and Apollo, all of which were built before their time, all of which have made a 41% CAGR possible. These products should be measured not just in their ability to throw off free cash flow, to generate outsized revenue, but most importantly, in their quintessential attribute that large companies, which essentially control distribution, cannot easily copy them, or if at all, they're too intricate, difficult, and thick to be replaced by larger incumbents and then distributed through their distribution chain. In the end, all software products actually have to be measured by, is this replaceable? How easy could it be replaced? Is the underlying platform durable or fleeting? And could a third party, highly technical with massive distribution, disrupt these products? If you look closely at PG, Foundry, Nexus Peering, MetaConstellation, and Apollo, as different as they are, they have one thing in common. It would take many, many years of the world's best engineers to build them. And you would be building them as we've improved them and as we capture the market. Thank you.